matter what, I can figure this out because we
Mhm.
don't all have the answers.
Right.
Even in
Right.
your 25 years, you don't have all the answers. But you can figure it out.
Good Lord. How about now?
Can y'all hear us now?
Can y'all hear us now? Volume not coming through on YouTube. Can you hear it? Can anybody hear us now? Okay, now we got to repeat all of what we just said.
When it downloads, I'm good luck.
I know. I want to hear all of that again.
Right?
Okay, good. They said they can hear us now. Okay.
Well, welcome everybody.
Well, welcome to the show. So I guess for those that could hear us, okay, we can hear now. Okay,
Awesome.
good.
Awesome.
So I guess we'll start again. This is the Real Life Real Estate
Yeah,
Investing Show where
let's
we
go.
talk about real life real estate situations, but we bring you real life real estate solutions. I'm your host, Glenn Glasper, affectionately known as Mr. Dollar Out of a Dime. And my super co-host, Miss Candace
Thank
Briggs,
you.
is with us today. And we've been talking, we got started. We was on
did.
fire,
We was
man.
in it. We was in it.
Let me see.
We was in that zone.
See if we can get that rewind
That's
button to
it.
go back.
Well, first of all, now that they can hear us, thank you again for your consistency in pushing me to be here, right? So it was years ago that you approached, we talked, and you're like, oh, y'all got to get on the show. And I was like, nah, me? No. In essence, I was in my own way. So I appreciate you and your consistency to say, no, in due time.
Yeah.
But yeah, so I appreciate that. So thank you for having me. Excited to be here, and excited to see all the people that we can touch and help out along the way.
Listen, you talk about consistency and pushing, and getting out of your own way.
That's it.
It's interesting. We do something for so long, and we think because we have a pattern of doing it, we're doing it the right way. And we're patterning ourselves sometimes in the wrong direction. But I got to say, and I say that to say, I was doing real estate for a long time, and I thought I was a businessman.
For sure.
Yeah. And I realized that as much as I was doing real estate, I was doing it. It was a hustle till I finally later on learned how to run it as a business.
Gotcha.
And that was 16 years in.
Okay.
Then later on, I thought I was, I've been talking about mindset for years.
Okay. Yeah.
And then you introduced me to something that helped me realize, like, dude, as much as I believe mindset is
Yeah.
a major part of anything that we do,
Yeah.
you open my eyes to help me see that it goes so much deeper.
So much deeper.
And understanding that, yes, our mindset is important,
Hmm.
but it's also important to realize some of the mindsets that some people have been caused by things that they experienced in life
It's not even on them.
that they might have forgotten even that they experienced, and they have a mindset of a certain way,
Yeah.
and they're doing things based on the pattern that, oh man, they're gonna make me
Come
preach
on,
this
keep
thing.
going, keep going, keep going. That's exactly right. A lot of the patterns, a lot of the things
Yes,
that we've seen, in some cases aren't even us. Stuff that we put
absolutely,
on ourselves. It's stuff that
absolutely.
we have picked up along the way from somebody that said something that was minute to them, but we held on to it.
Yes,
We held on to it, and
yes,
it shaped how we do business, how we show up, and it
right,
just affects us in every way. So mindset is everything. I
yes,
know a lot of people are saying it now. However, it runs so much deeper than just it just goes so deep into understanding to figure out what it is that is really holding you back from
hmm,
doing the very thing you know you should be doing.
right, right,
It
right,
all around mindset. It's all around mindset.
yeah.
It's crazy. Yeah.
So, and our topic today, listen, we're gonna probably skate this topic, so you're gonna have to be patient with us. And because I want to go back to say, first of all, I'm excited to be back doing the show. We've been off for a couple of weeks. In the summertime, different things happen. We travel,
Summertime.
we
Yeah,
live,
that's it. You got to with the
and
family,
so I'm
everything.
glad to be back doing the show. I'm glad to be back doing the show
Yeah.
with you.
Well, thank you. Thank you so much.
Uh,
I can't thank you enough for having me. Real talk.
and I'm excited to be doing this. So y'all bear with us. Our topic today is we're going to be talking about the pros and cons, and actually what private lending is, the
Hmm.
pros and cons of private lending, from the lender side as well as from the borrower side.
Absolutely. Absolutely.
And so that's the topic of discussion today. However, the disclaimer for today is
We might cover, might not.
we gonna cover
Yeah.
we gonna get into it,
Yeah.
but we gonna probably be some different areas
For sure.
that will help those that either haven't seen the show before,
For sure.
understand what the show is about, and
Absolutely. Absolutely.
some of the things that we'll get into will be relative. And I think because when we get together, it's
Yeah.
going to be definitely relative to
Absolutely.
mindset.
Absolutely. Always. Always. And for you all listening, please send us your questions and whatever questions you have. If we can help 1, 2 people get to the next step, move the needle further, and whatever it is, by all means, please let us know.
Yes, definitely, definitely. And for this show specifically, this is something that we do live.
Hmm.
We stream it live because we want to have the interaction.
Hmm.
We want to have the opportunity to answer those questions, and possibly ask some questions of some people that may be watching.
For sure. For sure.
We wanted to be interactive. Of course, we're here to share information, but there's, I understand that I don't know everything.
For sure. Yeah.
So if you want to contribute, if y'all want to contribute, the
Please.
things that I don't know, I know she knows. So together
And
we
the
know
things I don't
everything.
know. Right.
But for the other stuff
Right.
that we might not know,
Tap in.
out of everything, y'all give us some information.
Right. Right.
So let's talk a little bit, at least
Let's
give a
start.
little bit
All
about
right. Sounds good.
the private lending. One of the things, and I am in the private lending space to a degree.
Okay.
It's something that I'm going to be, well, as far as the lender goes.
Okay. Yeah.
And then I broker some loans from other people. What's up? Oh, is that that's Joe. What's up? Now this is a show he should have been on as well.
Hands down.
Yeah, we got to bring him back on
down.
here.
Yeah. What up, Joe?
What up? So talking about private lending, and Joe, I know you can speak to this as well. So thank you for joining us. Talking about private lending, there are some misnomers about what private lending is.
Absolutely.
Some people will describe private lending from a hard money perspective.
Yep.
Yeah, it's private to a degree because it's not
an institution.
Or it's not what's the word I'm looking for? Traditional financing.
Gotcha.
So it is private from that perspective.
Okay.
But from the perspective that I will be talking about, or we can talk about, and we can talk about either or, but the one that I'd like to discuss more is the real private, where it's an individual,
for sure,
or even a small group of individuals,
for sure,
which I've had the opportunity to work with a small group of individuals who've actually put together some funds and lent money to purchase properties or renovate properties or whatever the case may be.
Absolutely.
And then there's hard money. Hard money is money where it's primarily, in many cases, I'm using these words because it's subjective in some cases.
For sure.
Not really. It's based on the property.
Mm-hmm.
Now, hard money lenders here lately have come to ask your credit and whether or not you qualify based on your credit.
All those
So
things,
it's changed
for sure
from what it originally was.
Yeah, exactly.
I mean, I believe there are still some hard money lenders that are out there that don't necessarily qualify you based on your credit. They qualify you based on the property.
Okay. So
but they still will look at your credit.
Absolutely.
Yeah.
I don't know one that doesn't.
Right.
It doesn't look at your credit. Yeah. Yeah.
So if there is somebody out there that doesn't look at credit and y'all watch the show, please chime in and let us know how either we can get in contact with the people in the audience can get in contact with you.
Absolutely. It's powerful.
So tell me something about your experience with either hard money or private money.
Absolutely. So when we started investing, we did a mixture of both, right? So we started in 2016 and it was more of our first project. We used both. So we used a hard money loan to acquire the property and use private lending for the rehab and some of the gap funding. And I think the best way to learn something is by doing, right? So I was hearing about it, and even in our educating ourselves about the different process of being an investor, a real estate investor, it didn't make sense to me until we were in that project. And I'm like, okay, these are the numbers. This is what it looks like. The hard money lender at the time gave us 75% of the LTV. Wasn't back then, yeah. And then we had to come up with the gap in the rehab. And we were in the West End, so everything was a little cheaper back. I said 2016. Everything was cheaper back then. So it was like, even though the numbers weren't large, they were still large enough for us to just getting started. So we utilize hard money and private money. And so that's kind of where that understanding and relationship started with those two entities. And so from then, we might have used hard money for the next year or so. And then after that, we've been privately funded since. So
good stuff.
Yeah.
Good stuff. I gotta give a little bit of a kind of an idea.
Okay.
Back in the day, this was 2000. I want to say 2005.
Okay.
2004, 2005.
Okay.
There was a gentleman that said, "If you can fog up this mirror, I'll give you money to buy a house." And I'm a professional mirror fogger.
Right. Learn real quick. Okay. Yep.
So I fog that mirror up as many times as I possibly can. And back in the day, it was just that simple.
Wow.
And we're giving you money to buy the house, fix it up, and then I would sell it. Me, I wasn't as wise as I am today. I just bought them, fixed them, and sold them. Bought them, fixed them, and sold them.
Yeah.
Now I'm doing things differently. I'm holding on to them.
That's the beauty of being on the journey, right? So Absolutely. At the end of the day, so you were able to identify, okay, at 2004, 2005, you were buying and flipping. Okay, cool. And also it helped you, I'm sure, at that point in where you were in life. And now that the market has changed, different things have happened, it's like, okay, I still can't do that all the time. Right, so let me hold more.
Absolutely.
So just understanding the journey is not going to look the same, right?
Right.
Depending on where you are in life, different things need to happen to help move the needle forward for you.
Right.
And just having that grace with yourself to say, it doesn't have to be great. Like, it didn't have to be perfect. Let me say that. It doesn't have to be perfect. And also it's still okay and it's still good.
Yes.
You know what I mean? Yes. To keep moving forward. So sorry. That's the journey that you're on.
Listen,
in 2004, 2005.
You made an excellent point. And this again, y'all, you got to bear with us because we're veering back into the mindset space.
It's everything. It's everything around it, man.
I had to really embrace that saying. I don't know who said it first, but I believe I heard it from Les Brown. Okay. Where he said, you don't have to be great to get started, but you do have to get started to be great.
You have to.
And that's one of the things that, I go back to that even in, stuff that I'm doing today.
Yeah.
And I'm going to use that for the new podcast that I'm challenged with getting started with.
That's right. Y'all heard it first.
Right.
Because he's getting started.
You got to just do it. Just do it. But, just talking about even private lending.
Yeah.
And given a perspective from then where it was just, get along by a house, now the difference is, and of course, rightfully so, because of the transition in the market where private lenders or hard money lenders kind of lost their shirt back in the
Absolutely.
day, giving loans out like that.
Absolutely.
Now you got to have what they call skin in the game.
Yeah.
And that kind of weeds out the, I mean, I was an extreme rookie back then. That kind of that kind of weeds out some of the rookies or some of the people who are not really into the business.
For sure.
I mean, you got to come up
For
with
sure.
$30,000, $40,000, $50,000
Yeah, one way or
nowadays to get a hard money loan.
Yep.
And it protects, you know, the hard money lender
Right.
from somebody who, again,
Just-
doesn't know a whole lot about
Yeah.
it. And then some of the things, some of the requirements now, they want to see that you've done a flip in
Or
the last 2 years.
A couple of them. Yeah.
Yeah. And I'm
couple of
like,
them. Yeah.
well, first of all, I get it, but if I'm just getting started
How?
and I got my down payment money,
Yeah.
how am I supposed to be able to get the loan if I haven't done a flip?
Partnerships.
Boom.
Partnerships.
Partnerships.
You know what I mean? Like, okay, so yeah, you have the down payment for it, but you don't have
Yes.
the experience. So what do you do?
Absolutely.
You need to go find that person that you can identify with, that you all are on the same page, that maybe they don't have the funding, but they have the experience at the time, or whatever the case may be. But find the partner that y'all go in business together, do it the right way, get your LLC, everything, like, and go flip the house. Like, still don't stop there just because you don't have all the pieces to the puzzle. Go find the rest of the pieces, put the puzzle together, and make it happen.
You know, and that's another saying. It's where, you know, some people don't really enter into partnerships because they figure they got to give up the money, money,
or give up anything.
Right.
Yeah.
And what I understand is 50, 40, 30% of something is better than 100% of nothing.
Of nothing. Of nothing. Absolutely.
And some people will put their situations on pause or on hold, simply because they don't want to give up a percentage of the profit.
Absolutely.
You know,
and understand that partnerships don't always work out.
They listen. We're gonna get into the weeds with all of that. We're gonna talk about that as well. Yes.
You know what I mean? But it's okay. Again, it's okay. You're still alive. Try again.
Yes.
Just because that one situation doesn't work out, that doesn't mean to stop.
Absolutely.
That doesn't mean that wasn't maybe the right one for a long-term situation. Maybe that one was just good just to get your feet wet, or whatever the case may be. At the end of the day, just because that didn't work out, that does not mean stop. You know, so
that's true. That's true.
Yeah, the partnerships.
And you know, the other thing too is when you look at all of the pieces that have to come into play, like, you know, like we're talking about, one person, their credit might not be good, but they have money. The other person may not have experience, but they have credit. And then you may even have a third person who has experience that doesn't have any of that. So that partnership coming together can make something happen, and still splitting the profits.
Absolutely.
You get, for the one that has the credit, you get the experience. For the one who has the money, you get experience.
Everybody gets what they need.
Everybody gets what they need, you know, to be able to close the deal.
Makes it a win-win situation in that situation. And also, I just said that it might not work out, but on the flip side of that, it might just work out.
It might just work out.
And you might develop a situation where y'all create such a great situation that now y'all bought that one so unsure of how to move forward that now y'all have 30 properties together. Now y'all have 50 properties. Like, so at the end of the day, just do the thing. Like, get started. Like, because you just don't know. You know, you don't know the outcome. So
and then too, we talked about how some situations may not work out.
For sure.
And you said something earlier that reminds me of a saying that I have. And, you know, I start saying it around my son. I got to watch what I say because he's now saying it.
Yeah.
I said, but nobody died.
That's it. Right. That's it. But nobody died though.
And that in and of itself, you know, one thing I always say is either you win or you learn.
There's no losing.
There's no losing, right? No. If you either you win or you learn. In the situations where the partnership may not have worked out,
for sure,
take the experience into the next situation that you get into, so you can actually do better.
Absolutely.
Whether you didn't get it right or they didn't get it right, it's an opportunity to learn.
Absolutely.
You know, so, and it doesn't, you know, in that point, don't stop. Keep moving forward.
Don't stop. And also taking into account of self-reflection in that time. I think that's important before. So going on the example, if it doesn't work out, and before going into the next one, understand and take a self-reflection moment to say, well, what is it that I didn't understand? Is there something I could have understood a little bit better? Is there miscommunication somewhere before taking? And I know this, you know, before taking that baggage to another situation.
Definitely.
You know what I mean? So self-reflection is very important as well.
And when we talk about self-reflection, understand what where you may be lacking,
For sure.
and understand where that's an opportunity for you to gain strength in that area.
Yep.
So going into the next situation,
Mhm.
you can present more of a, you have more to present in that
Absolutely.
next situation.
Absolutely.
Somebody put a question here.
Okay.
Bobby Jones says, what was the difference in the lending criteria between hard money and private money?
The lending criteria.
Yes.
So if we're talking about the true individual for private money, in my situation, they go off the strength of the property. So credit's not a thing. My experience right now, we're using the same ones over, so they've seen our experience. And it's basically just raw numbers. Raw numbers. It's where's the property located? What's the ARV, after repair value, for those that don't know, of the property, and our plans. So are we flipping it? Are we holding it? What's the end goal? That's our private lending experience. And hard money, I haven't used it lately, so I'm gonna bounce that one back to you. I don't know. I think it's more what credit experience, like we're saying.
Yes.
They want to see that you've done so many flips in the last 6 months, 6 to 9 months, something like that. And then also your time period. So like they do 12 months, 12 months, maybe 2 years.
Yes.
For hard money. So that, and then whatever else.
Yeah, no, I mean that's pretty much it. Like, the criteria, the difference is the private lending, in my experience, private lending criteria is, in my experience, been more about relationships.
Yeah.
Right. It's been more about relationships and reputation.
Yes.
Reputation and relationships.
Yes.
And I've been able to borrow funds from other individuals to purchase properties.
For sure.
And of course the numbers have to make sense.
Absolutely. Absolutely.
But based on the reputation of me being in the business and doing it for as long as I have, does it always work out?
No.
No.
But guess what? You keep going.
It doesn't always work out. There's and just to be clear, and this is what I want folks to understand. Like a lot of times, and I'm gonna say this is real life real estate investing. People sell people on the rainbows and the all the beautiful things that happen in real estate, the shiny objects. But sometimes things happen.
Yes, they do.
Do loans get paid back on time all the time?
Not all the time.
Not all the time. You do the best you can.
Absolutely. Best foot forward always.
And now, of course, because in situations where we're talking about real estate, we're talking about buying properties and fixing them up.
Yeah.
Where you have so many things that are that are not in your control.
Absolutely.
I'm gonna talk about a situation I just had.
Okay.
I just got some interesting news on yesterday. So
this
I had
is fresh.
Yeah.
This is fresh.
Yeah.
Okay.
So I don't cuss. I'm trying not to cuss when I talk about this.
It's fresh, y'all. It's fresh.
Situation where I have a condo that I've been working on for some time.
Okay.
Finished the work, got everything done. The cleaners went over to clean. We turned on the water. The place flooded. Flooded. Now we have to go. We had the water remediators come in and they dried the place out. I tried to do it with a wet vac.
We learned quickly. I'm sure you did.
That
wasn't gonna.
That wasn't gonna do it.
That wasn't gonna cut it.
I never had this situation happen before.
Right.
So I don't have any experience.
So you're still learning.
I'm still learning.
After 25 plus years.
25 plus years, I'm still learning.
Yeah, that's awesome.
So never had this situation happen before. Never had an insurance claim.
For sure.
So called the insurance company. Tell them, hey, listen, we had a flood.
Yeah.
We need y'all to come and check it out so y'all can cover it.
Yeah.
They said, no, we don't cover that.
Okay.
The insurance agent literally told me they will cover volcanoes.
Because we have those in Georgia.
Okay. I'm like, okay, I ain't know that. I don't know where volcano is.
Right. Hawaii?
They will even cover a plane crashing on the place.
Before they cover a flood.
But they will not cover water damage.
Oh.
So they said that initially.
Okay. And
then they was like, well, let's go to someone else. I guess, I don't know, an affiliate they had.
Okay.
So they actually came out and you sent an adjuster out, and the adjuster came out and took pictures and everything.
Okay.
got an email yesterday saying, nope, we're still not going to cover it. So all of this time, I'm thinking, okay, there might be a chance that it's
Well,
going to
yeah,
happen.
because they sent the people out like
They're
that.
like, no, we're not going to cover it. So now with my hard money lender, this is a hard money lender.
Yeah,
We got to go back and extend the time
for sure.
because now we got to go back and fix it up all over again.
Okay.
And then puts us in a position to either sell or refinance.
Okay. So a couple questions I have from that.
Yes.
So from the damage, so now we're talking walls and floors.
Yes.
Floor. Okay.
Yes.
Oh wow. Okay.
Yes.
And so what does it look like from your perspective? Extending that hard money loan? Is it another percent added on the loan, or
it's probably going to be a small percentage,
Yeah.
or a penalty if you call it
For
that,
sure. Okay.
for extending the loan.
or extending
Yeah.
the loan?
So I mean, it's not a major issue. However,
That option.
not only does it cut into the profit,
Yes.
the time or now the renovation that we have to do all over again
Right.
cuts into the profit.
Right. Right.
You know, so and that's another point there to talk about is buying the property right.
You have to.
Buying the property right. And
Yeah.
I'm going to go back on my soapbox again
Yeah,
about
get on it.
wholesalers.
Yeah, get on it.
And I think this is an important part of real estate investing that a lot of beginners, i.e. wholesalers, miss.
Yeah.
They say, well, there's been some time, and I still see some of them presenting things where they don't feel that it's important for them to know the numbers.
Really? So what are they basing anything on?
That's a very good question.
If you don't know the numbers, what are you basing anything on?
Wholesalers have been saying for some time, and this is not all wholesalers, so I'm not coming for everybody.
Right.
But it's become a trend in the industry where wholesalers believe that they don't need to know the repair numbers because they're not the ones repairing the property. So their repair numbers are not important.
Right.
So my question has always been, when I hear something like that, when we talk about the numbers being important,
right?
How do you? And first of all, the ARV is not correct.
Never. Not
so
if
your ARV isn't correct,
yes,
and you don't know the repair numbers,
so
how are you justifying presenting a property to someone that's going to purchase it, and your fee is $20,000?
You can't justify that rationally, at least. Yeah.
So
wow.
That has been the thing that's been confusing me for a long time, and I felt like maybe I'm a dinosaur in this game.
For sure.
I don't understand how this works. Maybe I'm missing something.
It may be, and I wonder if it's more of I don't need to know, or I'm not humble enough to say I don't know. So help me to understand what these rehab numbers look like. From a wholesaler perspective.
Right.
I wonder if it's like, what is it there? Like, why do you feel like you wouldn't need to know the numbers to present yourself as someone that's knowledgeable? Because in order to get repeated customers,
ding, ding, ding,
i.e. investors, you need to know and you need to be trusted to begin with. Yes. You need to be trusted to say, oh, whenever so-and-so brings me a deal, I know that they've done all their due diligence. I know that they've done their numbers, and I know I can buy that property because I know it's a good deal.
Absolutely.
And without knowing your numbers, that will never happen. So
that's where my confusion has always been.
That's tough.
And then again, they've been taught that just add a fee and throw it out there and basically see what happens.
So if there's a wholesaler out there right now, hit us up in our DM. We ain't got to go live or public with it.
Right.
We got y'all. Please, if you don't know your numbers, and if you were one of those that believe you don't need to know your numbers, please hit us up.
And
let's go.
There are some that stand strong on that.
Hit us up.
I would, for those and I'll say this: you said to just go in the DM.
Yeah.
I wanted to talk to you openly.
Okay.
And just so I mean, again, maybe something I can learn.
Absolutely.
I want to know. I'm still curious, and I've heard the different arguments.
Yeah.
Nothing concrete yet that made me understand that. Yeah, wholesalers don't need to know the numbers. Yeah, I get it that they're not going to be the ones that are doing the work.
I understand that too.
But if you're presenting something to me with a $20,000 fee that you've built in, and your ARV is skewed, how are you making it plausible for me to want to, as you mentioned, either do business with you or continue to do business with you?
Right.
Right. And I guess that's one of the things that many of them have missed is the consistency
Yes.
and the volume
Repeat
based,
business.
the
Yeah.
volume based business that we should be doing
Yeah.
in real estate. I
Absolutely.
told y'all we was gonna get off talking
Yeah.
about hard money. I mean, it's still the same thing. We still talk about the same thing because one of the
That's
things that
important, though, y'all.
one of the things that I look at too, in when I look at a property,
Yeah.
I want to make sure the numbers that I get from the person that I'm buying
Right.
from fit my lender's criteria.
Absolutely. Absolutely.
And of course, yeah, if I got to come with a few more dollars, if it's a deal that makes sense for me in the long run,
Yeah.
especially with how I'm doing business now, I'm doing things a little differently. I'm not
Right.
just flipping.
For the rental.
So,
Yeah.
I mean, there's going to be an extended, an additional amount of profit for me over an extended amount of time.
Absolutely. Absolutely.
So I can skew my numbers a little bit,
Okay.
but I still want there to be a good profit margin in there
Absolutely.
where I'm not just throwing all my money in
Well,
and hoping for the best in 10 years.
That's it. And if you have another flood, like you can,
Oh,
it's okay. You know what I
right
mean?
there.
But I'm just saying. So now we have enough buffer, so to speak, in
Yes,
that to
yes.
say, all right, it's going to eat up a little bit, but also we got this nice, still this margin here, and
Absolutely.
we're okay.
Absolutely.
Yeah, you definitely got to buy right. And definitely is important to know your numbers.
So let's get into that a little
Yeah.
bit more. Let's get
Yeah.
into knowing the numbers a little bit more,
All right.
and buying right.
Okay.
Now, I know for as long as I've been doing this, the industry has adjusted.
It has.
It's adjusted from where it was once lenders will lend 60% of the after repair value.
Okay.
Then it was a hard 65%.
Yeah.
Then lenders adjusted to 70%.
Yeah.
Now some are going all the way up to 80%
Wow.
of the after repair value.
After. Oh, wow.
And the thing that I can equate that to, I guess being dabbling, I'll call it. I'm not an actual private lender or a hard money lender,
Sure.
but
Sure.
I'm in the brokering space.
Sure. Sure.
So I can only adjust that. I can only see that in how the refinance is happening.
Okay.
Because now with the DSCR loans and the different loans for people who hold properties,
Yeah.
their lending is going up to 80%.
Nice.
In very small cases, 85 I've seen once before.
Oh, wow.
Now, according to a couple people that I've spoken to, they're scaling back even that
Okay.
to the 75 and 70%.
So, wow. Out of 80s altogether.
Yeah.
Okay.
So that's why when we're talking about buying right,
Yeah.
we have to look at the numbers that we're going to have to present to the lender that we're going to borrow from.
Yeah.
And as well as how much we're going to additionally bring to the table. And if it's going to make sense if we're going to bring additional to the table when we buy, and if we got to bring additional to the table when we refinance.
Because a lot of people don't know that you bring money to the table in
Definitely.
some cases. In some cases,
yeah.
The ideal goal is that your property appreciated so much that when you do refinance, you have to bring anything to the table. But in all situations, that's not the case.
Absolutely.
That's not the case. So that's something to be mentioned, that sometimes you do have to bring money to the table when you refinance.
And this is, and I think it's important to discuss this when we're talking about buying from wholesalers.
Yeah.
I think wholesalers will always be, if they play the business right, I think wholesalers will always be a very important part of investing in real estate.
Agree.
However, in order for wholesalers to continue to be a very important part, we just got to do our business better.
We got to clean up a little bit.
We got to do our business better, and knowing the things that are necessary for us to be able to continue to do business with specific wholesalers on a consistent basis.
Yeah.
We need to be comfortable with you knowing what, at least some of what we know.
Yeah.
In order for us to consistently do business with
Absolutely.
What do you think about that?
I think it's great. I think, again, that's not necessarily partnership, but it is working together, right? So if my goal is to purchase from wholesalers, your purpose is to sell to investors, why wouldn't we work together? Why wouldn't we share the knowledge? So again, because
I'm a wholesaler. All I want to do is make money. I don't care about what happens.
Okay.
I'm just kidding.
And that's the problem. With one, we got to care about the other person. So at the end of the day, even when we flip houses, like, we care about the product that we're giving to.
Absolutely.
I don't want, once I sell the house falls down. Like, I want to sleep good at night.
True.
You know what I mean? So it's like always caring about, the next situation, I guess. And not just being like, oh, well, it's off my hands, gotta go.
Right,
no.
Right.
But yeah, I think that we should work together. I think that we should work together with wholesalers. And I mean, as long as we can work together and everybody understands, but there's a lot of money to be made out here. There's a lot of money to be made.
Shawana says I'm going in with the low end of the ARV just for protection. I'm glad she pointed that out. Where, if the idea, okay, that's the idea, to go in with the low end of the ARV, and we're talking 65%.
Okay,
I mean that's what I would consider the low end. Where are there deals that we can purchase consistently, still at the lower end of the ARV? Somebody, can you tell us?
Tap in right now.
And those deals, I mean, they're out there.
There are deals,
and we can certainly, I mean, as what we are, transaction engineers, we can manufacture those deals. We can make them happen. It's just that they are, I would say, few and far between.
That's exactly what I was thinking. Exact terminology.
But if there's some consistency and you find, now Shawana's in Detroit, so Shawana, don't be giving the game away, Shawana. I'm just
Detroit. We coming to Detroit. We coming.
there are some in Detroit.
We're coming to Detroit,
and most of them that you find, and correct me if I'm wrong, Shawana, because this is what I'm finding.
Okay.
Most of the ones that you find in Detroit that you can still get at 65 cents on the dollar are direct to seller.
Okay.
But that leaves out the wholesalers being able to make money.
I do understand that, and also, aren't some of the best deals direct to seller?
All the deals are, most deals are direct to seller.
Yeah, right.
And
that's what the best ones are.
Here's another thing I'm glad you said that, because many of our sellers now have been presented offers from people who don't know how to negotiate. So when we get to them to actually make them a real offer,
they don't understand. They lost in the sauce.
Well, my house is worth the same house that's down the street that's sold
renovated and all these things, and it's apples to apples. No. Honey.
And I had somebody else call me and say they was going to give me $50,000 more than what you going to give me.
Why haven't you taken the offer yet? Why haven't you taken the offer yet?
Why hasn't it closed yet?
Well, right. The person's not real. So, but yes, and again, it comes to education as well.
Okay, talk about that. Talk about that.
As it comes to educating,
you said the person's not real. What does that mean? Tell us what that means.
It's either a daisy chain or they don't have the I don't know, like they don't have the funding for it. They are just looking online and say, okay, Zillow says your house is worth X, Y, and Z, so it must be worth that. Right, so let me go to this homeowner and say, but they don't have the backing for it, the funding for it. And so
to tell me that there's people making offers based on this estimate?
What? The credit karma to investing? What? Of course.
That is something else.
Yeah.
Yeah, we got a lot of work to do there.
And we're here. Listen, and we're here. Let's get started. Let's go.
Says
each one teach one.
She said, rare gems. That's why I love wholesalers.
And there are some great wholesalers out there. Now. Let's be real.
And there are.
There are some great ones.
Like there are. Yeah, I'm not gonna use that phrase. And this, I'm being facetious.
Okay.
There was somebody that once says there are really good people on both sides.
Both sides of the coin.
You remember that phrase that somebody said? I'm not gonna say who said it. It was a situation. So it was a person.
Okay.
Somebody gonna know what I'm talking about. They're really good people on both sides. Okay. You remember that phrase? You're gonna make me say it.
No, don't say it.
You're gonna make me say it. They're gonna come for me if I say it.
We want the smoke. We want the problems.
No, when there was, I think it was a protest. And remember the riots and
gotcha.
And then somebody
Yep.
I don't want to give him any shine.
I just erased that from my memory. Right. That's why I don't remember. Got it.
But just thinking about from a we're talking about wholesalers and talking about how the business could be so much better, as you mentioned, if we work together.
Absolutely.
And I think the consistency in our business would be a whole lot better. Talking about, them actually making offers
Yeah.
that make sense.
Absolutely.
So we don't have to go back in and make an
And
offer.
reteach or teach. I should say.
Exactly,
I should say,
exactly.
yeah.
And I think a lot of the lack in understanding when we talk about negotiation comes in understanding that as a this rabbit hole gonna get deeper and deeper. As a person who presents an offer to a host to a seller,
Right.
we are the ones that should be educating them
Absolutely. Absolutely.
on why we offer what we
Right.
offer. But if we're not educated enough to present an offer to them,
We're lost now. Then and honestly, it makes it harder for us to have to pick up the pieces to then go
yes,
back to the homeowner and be like, okay, I hear that you got an offer for X, Y, and Z.
yeah,
However, but it's like now we have to rebuild that rapport, rebuild that trust, and almost immediately with the seller to say,
mhm,
I know what you've been told, and also here are some good facts. Here are some things that you can actually hold on to that's viable data
yeah,
to show why we're offering what we're offering. But it's just a lot harder as opposed to us getting to them the first time around,
real stuff, real
or
stuff.
an wholesaler knowing what they're talking about, and
Right,
we following up to say, hey, just adding on to what they've presented already, type thing.
right,
It makes it a lot harder for us
absolutely.
if it's not done right.
And I want y'all to get it. Listen, well, somebody might say, I thought they was talking about private money.
Yeah,
Private
sorry.
money. All of these things play a
They
factor
do. They do.
into how we're able to. And again, as I mentioned, the lenders have started to transition into the skewing of the numbers.
Yes.
So they've
Yeah.
adjusted their lending to based on what the market will bear.
But yeah.
The market is bearing what a lot of, I'm gonna say it, miseducated people
Yeah.
have
I say,
caused.
yeah.
Right?
Yeah.
You would never get a lender that would. I mean, if the market was still what it was, they wouldn't go up to 75%.
Yeah.
Because it wouldn't make sense to, unfortunately, in many cases, lend to people who are buying properties that are setting themselves up for failure.
Right.
I mean, you got to look
Yeah.
at, there's an old saying, something is worth what someone is willing to pay for.
For yeah.
And when you have quite a few people coming into the business
Yeah.
paying more for properties than they should,
It now says, in essence, this is what it's worth.
this is what it's worth.
Yeah.
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 Yeah. I mean, think about it. We
Yeah.
had properties in a pandemic. People were paying $100,000 more.
It's crazy. That's
Right. I'm
crazy.
like,
Yeah.
they're paying $100,000 more than asking.
Then asking, yeah. On like 30 minutes of listing.
25 minutes.
Yeah, right. Of listing the property. It's already under contract. $100,000 more. But I mean, to your point, this is what the market said, whether
Yes.
good, bad, or indifferent. This is what the market said that your property is worth, and that's what
Mhm.
people are going to pay.
Right.
So,
Right.
that's crazy. But back on the our private money lending question for you: how do you approach building relationships with private lenders?
Well, I think again the key is consistency.
Yeah.
The key is consistency in who you know and what your experience is.
Okay.
And even my approach isn't always first with experience.
Okay.
My approach is first with building a relationship.
Okay.
Right. Understanding who the person is and understanding and helping them understand who I am.
Okay.
Because I'll be honest, I haven't always taken money from investors who don't know something
Sure.
about real estate.
Sure.
Right. If there, and then oftentimes because you run into the challenge, or I have run into the challenge, just being real.
Yeah.
I have run into the challenge of people not really understanding how business works and how, while yes, these are the parameters of what we set for things to happen a certain way,
Right.
and understanding that this is not a quick flip. I mean, it is a quick flip type of situation.
In theory. Yeah.
In theory.
Yeah.
But don't expect to let me borrow $50,000 today and you get $75,000 back tomorrow. No, that's not, and unfortunately, when people look at things like that, it causes more issues.
For sure.
And now of course, realistically, we're not talking a tomorrow type of situation.
Right.
But even in 6 months.
Right. Depending on how big the project is.
Yeah, there are so many different things that can happen in that situation. And even with experience, there are certain things that can happen. So having to set the expectations of a person who's not really familiar with how the business works comes in first understanding who they are.
Yeah.
I don't care if you got $100,000. I don't care if you want to give me $100,000. But I need for you to understand that this is how this works.
Yeah.
Even from an education standpoint, I often tell people that want to learn from me. If you can't prepare yourself for almost everything going wrong, I'm probably not the person you want to work with, because people have been sold a bill of goods from a lending perspective as well as a investing perspective that they think that everything's going to be perfect. And everything's going. Of course, optimistically, I'm optimistic and believe everything's going to be okay.
Yeah. Okay. Yeah.
However, in my experience, there's been some challenges. So I mean, just to go back to answer your question specifically, I approach it from building a relationship and understanding where the person is from a mindset perspective, and if they're willing to be able to still invest, knowing that these are the parameters that we set. And B, there are possibilities. So we set contingencies for what may potentially happen.
Yeah. And I think that that's better preparation too, right? So if you come to a private lender, say, like with the mindset that nothing's going to go wrong, right? So then you don't have that buffer in. So now when something does go wrong, now your lender's upset because they're like, well, you didn't tell me all of this for, somebody that may be lending for the first time or whatever the case may be. So having that, like you said, the expectations up front, like, listen, we expect for this project to take 3 to 6 months. However, we're going to put it in a little bit of buffer just in case if something goes wrong, whatever the case may be. But setting that expectation and also building rapport.
Absolutely. Building rapport is a major part of it.
Why do people do business with you? Because you have rapport built with them.
Right. They know,
they
trust you at this point. Yeah.
They trust you at this point, right? So it's like, Glenn got something. Okay, cool. Let's roll.
Well, and that's what we're talking about, building relationships.
Yeah, absolutely. Absolutely.
Let's see. We have Shauna says, there's no logic to this market. You have to find find them any and everywhere. You're right. You're absolutely right. I guess Kimberly was like, "Don't say it." She said, "Don't say it." I guess she's talking about what I was.
Don't do it. Don't do it.
I was talking about good people on both sides.
And who did the first comment come from?
Shawana.
That's a great point. Like, you have to not be stuck to an area.
Yes.
Right. And I'm learning that myself. So like, there's one area I've been hyper focused in. And I'm like, okay, well, the deals aren't flowing as much as they should. However, and also I know that there are deals out there. What do I need to adjust? Like she said, you got to go to different areas, like not being so attached to one area that you're not open to going somewhere else to find those deals, so.
Hence why the last few years I've been doing business in Detroit.
Yeah.
Well, and because what changed for me, and I'm actually transitioning back into doing business in Atlanta as well. What changed for me was, I'm gonna keep it real. I had to stop playing the game of real estate.
Okay.
And the game of real estate is, I flipped 30 houses and this is what I did.
Yeah.
Okay, all that sounds good.
Yeah.
But at the same time, we went through this, or we're still in some cases going through this ideology of generational wealth.
Yeah.
What I still call, I like to call it, what's my word? Not generational wealth, but legacy wealth. Yeah. Why couldn't I think of that? For me, what changed is, dude, wait a minute. Yeah, you flipped houses and you've done all that.
Yeah.
But I got back into the same pattern that I was in back in 2005, 6, 7, and 8.
Okay.
Buying, fixing, and flipping everything.
And selling everything. Okay.
So when the market crashed in 2008, I had no properties because I sold everything.
For sure.
So that's what changed for me. I'm like, wait a minute. And I had to look at the numbers. I'm like, if I buy a property in Georgia for what was median price $200,000,
easy, yeah,
and I'm only going to get $1,200 to $1,300 in rent, that doesn't make sense.
Yeah,
that doesn't even add up to the so-called 1% rule.
Yeah,
I'm like, that doesn't add up for me. But if I go and buy a property in Detroit for $20,000, and maybe fix it up, put $20,000 into it, I'm $40,000 all in, and I can still get $1,000 in rent.
Who's mad at that?
I'm like, 1 plus 1 equal 2 sometimes.
Right,
You know what I
right.
mean?
I'm
So
telling you.
that's where it
Okay.
shifted for me.
For
So
sure.
my main focus lately has been a portfolio play,
Okay.
right? So instead of playing the game of real estate, I'm building true
Actually doing it.
legacy wealth.
Yeah.
And that's why people may not see me on social media talking about all the things that I'm doing, because instead of just being alive, I'm actually living.
That's it. And as you should. Listen, you got one to live, so get out there and live it.
Shout out to my wife. She posted that, and it's kind of the point that I was making. Like I said, I don't post on social media all the time, but she posted just today about our anniversary on July 30th. And she was like, we've been spending time having so much fun.
Yeah.
We didn't even have time to post on social media.
Up.
That's what's been happening.
That's how life should be. And happy anniversary.
Thank you very much. Thank you very
Which
much.
is interesting because our anniversary is the 31st.
That's right. I saw yours too. Happy
crazy.
anniversary to you as well.
Ooh, great spirits. Great spirits.
Yes, indeed. Yes, indeed.
But no, that's what we should be doing. That's what we should be doing.
Yes.
Living life. And you said you were doing this thing called investing. Is that the exact words you used? The rat race. So I forgot just the term that you just used.
Playing the game.
Playing
of
the
real
game.
estate.
Playing the game.
Yeah.
What made you feel as though you were playing the game versus actually doing what you should be doing, I guess, and building that legacy? Like, what made you feel like I'm playing the game, right? So was it something that you saw, or the way that you saw real estate being transaction that you saw or whatever made you feel as though I have to do it this way versus the legacy play?
Well, very good question. I'm glad you asked that. Yeah, you got to be on the show with me all. Get somebody to ask me some questions. No, no, very good question though. It was how, I guess, my experience at the time was. I'm like, okay, my circle of people are doing so many different, flips. Yeah. Let me do so many flips.
Sure.
And I mean, like I said, it's all well and good, because we're still making money.
For sure.
And it is good to have other people push you to do better. And I don't look at it as a competition. I look at it as encouragement. And then it pushes us to get to collaboration.
Absolutely.
So what it was for me is like, it's encouragement. Like, dude, you got to still keep the grind on.
Yeah.
But shout out to the grind guy.
That's it.
I don't want to grind no more. I don't want it to be a grind anymore.
Right. Yeah.
And fixing and flipping, to me, what I also came to understand is it's a how do I say it? You don't make a whole lot of money.
Yeah. You
don't make the money that you think you make fixing and flipping. And I say that from the perspective of, now, first of all, you get a whole lot of a cash influx.
It is right out.
However,
right out the door.
It's gone almost before you get it.
And
I'm like, wait a minute, hold on, dog. All of this is taxable income.
All of it. Every penny
is earned. You pay earned income taxes on this. I'm like, no, that's not how I want to do this.
Yeah.
I want to be able to buy properties, fixing them up, and then I sell them on seller finance.
For sure.
So all my tax, for the most part, is deferred.
Yeah.
So for me building my legacy, we pay taxes on that down the road somewhere.
Yeah.
You know what I mean?
Yeah, that's it.
So that was one of the major things for me. Instead of being in the fix and flip game, let me get into what will really be something long term, for myself and my family.
That's it. That's it.
And I was like, you know what? I when you look at the amount of doors, and this is the other thing that's making me love real estate, but not like it so much. And I'm gonna say it, this is real life real estate investing. So y'all want to come for me, I'm here. You have people that will spend 6 to 9 months fixing up a property.
Yeah.
And and I'm gonna say it too. All my Atlanta folks, y'all know what I'm talking about. You Atlanta folk, you know what I'm talking about too.
I'm already there.
You spend 6 to 9 months fixing up this property.
Yeah.
That you're all in now. We'll say $250,000 in today's market. Okay, after you fix it up, it's worth $325,000.
Yeah.
And what's 80% of $325,000 when you refinance? I don't know. Whatever. We'll call it $300,000.
That number, okay.
And it's $300,000, and the rent that you get on it is $2,500. pushing the top of the market.
Right. Pushing market.
So what it and the interest rates are now 8%, 7-8%.
Yeah.
On the investor loan.
Investor loans, yeah.
So your mortgage payment, I don't know, roughly 2,800. Let's say it's 2,400. Maybe.
Yeah.
So you're all in 2,400 and you're getting 2,500.
Oh, yeah.
In rent.
In rent. Yeah.
You got $100,000. You got $100
to say that you spent all that time.
Spend all of that time. Now, of course, you get cash out and you get, property value increase, all of that. You get your deductions for, y'all know what I'm talking about. I can't think of the word now, but you get your deductions for that and your tax deductions. And all of that for $100 a sliver.
Yeah.
And now, of course, the house has been renovated, so it should be in great condition.
For sure.
But if something happens,
now you're coming out of your personal pocket. Yeah. Because you only have the money to set aside for your maintenance and stuff of that nature. That will come down the line, but yeah.
Right. So I was like, you know what? I'm gonna go to Detroit. I'm gonna take my talents to Detroit. So where my spread is at least $500, $600, $700.
Yeah. Yeah.
On my $40,000-$50,000 property.
And it makes sense. It makes sense.
I get $1,000 in rent and my mortgage is $300.
Where they do that at?
Right.
In Detroit?
Yeah, that's what I'm saying. So that's why, and for me, like I said, it makes sense for me to do it that way because I get a bigger profit.
For sure.
Now keep in mind, I spent $50. I'm only in $50,000 for this property. It might now be worth $125,000.
Okay.
And if I sell it on seller financing, I can set my price at $150,000.
Yeah. At the what it's going to be when you
exactly
when they pay the loan off.
And I give them 3, 4 years, 5 years for it to appreciate over that time. And I cash out more on the other side. It's a
beautiful setup. That's a beautiful setup.
Let's see.
Yeah.
What okay. Now I gotta admit I can't read that. That's why real estate is about relationships. Always. Kimberly, what's up, Kimberly?
What up,
she said if someone is open and vulnerable to being wrong and learning a different way of doing things, then the deal can get done.
That's it.
But price to the side and put price to the side to be willing to learn. Amen.
I agree.
To that.
That's it.
Amen to that.
I agree.
Let's see, we got here that part, Shawana says. Listen, I want to thank y'all for tuning in with us today. Please like, share, and subscribe. I know we got it on the screen, but I know we got to remind people sometimes.
That's it.
Share it, like it, subscribe to the YouTube channel. Definitely follow both of us on social media. I think we got the social media on here somewhere. Follow both of us on social media.
Okay.
What's your social media?
So my social media on Instagram is B2 Buys Houses. My personal is Ace the Eagle. That is ACEDA Eagle EAGLE. And yeah, that's where you can find me.
That's what's
on IG.
And I'm Glenn Glasper, Real Life Real Estate Investing, and Mr. Dollar Out of a Dime on social media. So definitely plug in with us. DM us. Let's talk.
Please do.
Let's talk.
Let's go.
And we're a little over our time, but what anything else you want to talk about?
Listen, I mean, whatever y'all want us to talk about, let us know. And if y'all have questions, real talk, please hit us up. I think the more we can put out there, the more knowledge we can share. I think everything will be a lot better. And us working together, whether you're in Detroit, whether you're in Georgia, wherever, no matter where you are, reach out. We can always help each other, no matter what.
Absolutely, absolutely. And the moral of the story is, I'm trying to. What show was that on? The guy was going, and the moral of the story is.
Like Andy Griffith,
Huh?
No,
I forgot what show that was.
I can hear the voice in my head.
Right, me too.
Okay.
And again, as we talked about earlier, the show is about private lending.
I was about to say mindset. I was like, yeah, mindset. My bad.
But we did say we was going to get into a few different places.
Yes.
But one of the things I want to make sure I point out is private lending from the lender side. Most people don't know how to lend funds. Like, you have people that have money in the bank and don't know what to do with it.
Absolutely.
And of course, we can show you what to do with it, where you can get a return on your investment.
Absolutely.
And whatever it may be. Before I wouldn't talk to anybody who had less than $50,000.
Okay.
However,
I am not that person.
right?
If you, I am. I will talk all day.
Exactly. But now, what I've started to do is actually work with people and have them come together to do investments.
Okay.
Or there's other smaller things that they can invest in
sure.
as it relates to real estate.
Absolutely.
So we will have those conversations and again, this is not not on purpose, but it can be. I'm not just looking for you to give me your money, but if you want to, we can definitely talk about it. But no, I really want to provide a safe space for people to be educated on what private money looks like.
Absolutely.
How they can get a return on their investment, and as well as those that are looking for private money, how we can help them be able to obtain some private funds.
And from a lender standpoint, if you don't know what to do, please reach out, because your money should work for you. Your money is a tool, right?
Yes.
And it's energy being passed, right? So if you have it just sitting somewhere, what is it doing? Literally just sitting. It's not multiplying. It's not doing anything. But that moment that you put your money into something that can multiply whatever, 10, 12% and in 6 months, you get it back. I mean, the moment that you do something with that money, more of it will come back to you. So yes, if you're one of those people that are like, hey, listen, I have $50,000 in the bank, and I don't know what to do with it, and I want to make sure it's secured by something, because all of your lending should be secured by the actual real estate, right?
Absolutely.
So it's backed by real estate. So yeah, please reach out to us. Please let us know, and let's have that conversation.
Real talk. And one thing that you said is, some people say money is a tool. Richest Man in Babylon book says money should be your slave. Make money your slave. Your money should be going out to work for you and coming back to you. That's it. And actually, the slave should have children.
So multiplying.
Definitely. That's all I have.
Well, before we jump off, I have got to shout out my guy. We're at Nine Tail Productions.
Definitely.
Thank you for showing up with us and being always willing to help. Thank you.
Hey, listen. Y'all think this looked good. This dude has got some stuff going on over here. I thought I knew something. Of course, video stuff is not my space. I just know real estate.
Right.
I just happen to have a camera.
That's it.
But my man got it going on. Definitely shout out to him. Thank you for stopping by to help us out. And listen, for your video production needs,
please.
What's the IG?
It is Nine Tail Productions.
So if you can't hear him, his IG is Nine Tailed Productions on IG.
Yep. Ninetail.productions.
Ninetail.productions on IG. So please go follow my man. He is the truth. And again, thank you for your willingness to always show up. I appreciate it.
Absolutely.
Appreciate you.
And again, this has been the Real Life Real Estate Investing Show, where we talk about real life real estate situations, but we bring you real life real estate solutions. Hey, listen, stay tuned, because I want y'all to get this.
Please do.
She's going to be back with me next week.
Let's go.
This is the co-host. We rocking.
Let's go.
We're going to keep it rocking. And I definitely want to shout out Lorraine Beato. We're going to be doing real life real estate investing after dark. So definitely stay tuned for that.
Bring cocktails.
We're going to be doing all kind of stuff.
Cocktails?
All kind of stuff. I'm back in it. We've been off for a while. I'm back in it. I want to get back to sharing information, sharing knowledge, sharing experience.
That's it.
And also being open to receive some as well.
Absolutely.
So, thank y'all for tuning in. Thank y'all for watching. We will check y'all out next week. And we'll, actually we're going to talk about something else next week, but we'll tell you what that's going to be next week.
Next week, right?
Thank y'all for tuning in.
Y'all.
See y'all next week.
Have a blessed